Hello, everybody. This is Stephen Choi. Thank you for joining me. This is Trading with Livevol, and this is where I trade my real Reg T account, and I use LVX to trade. And you guys can see what I do, how I do, and how I arrive at the trades that I arrive at. That was a lot of arrive. But anyway, let's actually get to it. This is my account. Looks like I'm up a little bit. The good news is I'm on a 3-day winning streak, and if I win again today, I'll make it 4. So that's at least pretty good. But you know, it's just it's just a start. So I'm still learning, but it's pretty cool. And so for those of you guys who are recently joining me, I did a couple of trades. It didn't work out. So I kind of changed my strategy a little bit, which was I'll trade smaller, and I would actually not try to arrive at like trade ideas by myself, but I'll just let the software identify them, and if I like it, I'll piggyback it. So that's kind of the difference. I had these 2 big bets in Apple and Zynga, didn't work out too well, but since recently that I've changed, maybe it can work out better. I don't know. For now, it's worked for 4 days, but we'll see going forward how it will be. So let me actually go and tell you guys a little bit of how I'm getting these ideas for those of you guys who do not know. But if you see me every day, you kind of know what I do, which is this watch list trades. Basically, I set it for all trades in the marketplace that's 1,000 contracts or more. So they scroll right here. I look at it, and then basically, if there's something that I like, I'll do the trade. So I'll actually go to some of the stuff that that I found out. So Annaly Management, basically, for those of you guys who don't know, they're like a real estate mortgage company, right? So a little bit financial, but they have earnings, but not until April 30th. But you see all these calls that they're buying. So April 25, 11, and this is and 11.5 calls. So if you look at these calls that they're buying, it actually expires before the earnings, and this is what's happening, right? So one of the things is, you know, you click on the actual volume today. You can click on the strike, and you see how all these call buying, right? The 11 calls. Then I click on the 11.5. and I see all these 11.5 calls buying, right? So if you are assuming that looks like somebody is buying these 11 and 11.5 calls that are basically expiring in 3 days, right? They're expiring in 3 days and they're buying these calls. Well, what gives, right? So first, I look at the volatility. It's at the 31 percentile, right? So it probably ticked up a little bit just because people are buying those calls. But in general, over the course of the last year, it's relatively on the low side, right? So that's number 1. Number 2, the earnings, these options actually expire before earnings. And number 3, if you look at the technicals, and I'm looking at the monthlies, it's kind of like going up here a little bit. Let me look at the weeklies. And then let me look at the dailies. Right, so basically, if you look at it, what people are buying is these and the 40 kind, saying that it's going to go higher, right? So it's pretty interesting. Not sure if I want to just buy these calls. I wouldn't mind doing this spread, because I think this spread might not be too bad, right? Just 38 cents. But the problem is then you only make 12. So like, what's the point of buying all these calls and then you only make, 12 cents? So, I think in the end you probably have to buy these naked, but it's not something that's that appealing to me. I guess another thing you can do is maybe buy these, right? The May 2s, the one that have earnings, because most likely they won't decay, and then maybe sell these, right? But in the end, like, what are we talking about? It's a half a buck. So I'm not sure. I haven't found a good trade to do on this one, so I didn't do it. Let me go to the next one. Facebook. Now, yesterday I told you guys about some dude buying massive amounts of these January 45 puts, right? 30,000 of them, in fact. Yesterday it traded, right? So you see right here, 30,000. The guy bought paying 277. So that's one. They have actually earnings coming up after market tomorrow, right? So I'll probably be talking about this earnings-wise, but I did see an interesting trade, and I didn't get it from here, right? I actually got it, just so you guys know, I got it from this, the watch list trades, right? So when I actually log in to do this video blog, basically it resets. So I actually lose all the historical, but in the morning when I log in, I just kind of peruse, and you see that it looks like this traded, right? So this 5,000 lot, you see this 5,000? Both of them were traded on the offer, so it's not that clear, right? But if you look at the SEP 65 that also traded, right, an hour earlier, looks like they were buying the SEP 65 and selling the May 65s, right? So as you guys know, I love doing these kind of spreads where you buy the back month, sell the front month, and hopefully like nothing happens, right? So they're selling the 65, so maybe what they're saying is at the earnings, nothing much is going to happen with Facebook, right? So it's not going to actually go back up to 70. It's actually going to just pretty much just hang out here. But in the long run, he would like to buy the 65 calls, right? So I look at Facebook. Let me look at it. All right, so it had this jump up because of, I guess, some upgrade. But he's going to sell these and buy the others, and essentially his risk is 355. It's 295 and 650, right? So, oh, sorry. So what I'm gonna do is I like that trade. So I think I'm gonna try to piggyback that trade. I'm gonna buy SEP, sell May, right? Buy these. You see 20,000 traded already, and then I'm going to sell the Mays. See 20,000 traded here, right? So looks like it's 350, 360. So I'm actually going to pay 355. I'm going to do two of them. So max outlay here. So since one lot is $355, it's actually a decent sized bet, because I'm betting 700 on this. That's maximum I can lose. So I'll lose this if if Facebook basically moves a lot, right? Because essentially by doing this time spread, I'm basically front spreading, or I'm selling the straddle in the front month, right? And maybe I'll show it to you guys, but I'm gonna send this order right here. 355. Hopefully I get filled. Boom. Oh, I got filled. Probably could have maybe done it for 350. But anyway, It's a nickel, right? So I sold this. So basically what I have now is I'm short the May 65 calls, and I'm long the September 65. So basically I have a long time for these to work in my favor. And my thinking is, if for whatever reason Facebook looks like it's going to hang out at 65 and consolidate for like 2 or 3 months, that would be ideal for me, right? Maybe 4 months, because then I'll just keep selling the calls and basically get the other call for free, the September calls, right? So that's the trade I did because I like the Facebook, right? Let's go to the next one. POT, potash. So these guys, I don't know that much about the company itself, or although I have traded a decent amount, but they do like fertilizers, right? And there was some issue with fertilizers in the back, how the monopoly or the oligopoly was breaking up, and it took some beating. But anyway, in terms of stats, you can see people doing this spread, right? The May 32-31 put spread. I know they're doing it for 3 cents, but I actually don't know what side they're doing. And I don't know what they're doing because it seems like they're buying both, right? So, I look at the chart, it's actually bullish. So buying the 32-31 put spread seems a little weird. But, if you're only paying 3 cents, it might not be too bad, right? I'd rather pay 3 cents and have a chance of making 97 than sell it for 3 cents and lose 97, right? Just in principle. So I don't know if that's what they're doing, but let's just say this actually looks like they're buying both. But if you look at it, 40,000 puts traded to 5,000 calls, negative delta, and they're buying premium, right? So whatever reason, this is not a bullish bet in my opinion. And it's been trading. It's been kind of like trading back and forth in a range, but it's steadily moving up. And basically, this person is buying this put, which is, I don't know, kind of unlikely that it will come in, right? So that's why I didn't do any trade on it. If I were to do anything, I'll do it. Let me actually see what I can. Let me see if I'm actually working any of this stuff. No, I'm not working that. So I'm gonna do this trade. Well, I'm gonna put in this trade, but I'm not gonna. Right, so I'm actually gonna put it in for 2 cents instead of 3. Right, and I'll do it 50 times. So I'll risk $100 to do this. I probably won't get filled, but hey, look, it wasn't that important to me. If I get filled, that's great. It's for a great price. If not, then I don't really care about it, right? So EFA, so it looks like 20,000 of these traded. It looks like they're buying the puts, right? But it's hard to tell. This is an index fund. Right. So basically, I mean, I don't know. I just thought it was interesting. For those of you guys who know more about this index, maybe it's a good trade for you guys. Me personally, I don't really have that big of an opinion, but I thought it was interesting. Newmont. So you know how like a few days ago I was telling you about this guy who bought all those ABX calls, right? So I look at the stats here, and looks like somebody is buying these. But the weird thing again, it's like they're trading on the offer, right? So these June puts, either they're buying or something, right? So you see how there's 10,000 and 12,000 already. I click on the strike. You see how this open interest has been going down. Let's see, actually, this one, and this one's been going up. So maybe right, so the June 23 puts have been going up and the June 21 put have been going down. And if you, and this is, I don't know if that's the case, right? But it looks like if this person did buy, it was for 36 cents, right? So maybe, let me actually try to do some research here. Bear with me here. So I'm gonna click on this. So you see how there's this volume, you click on it, and you're trying to figure out like, okay, this guy bought this, but did he actually buy it or he was trying to sell? Oh, looks like he just bought it, right? How about the 21 puts? $18.18, $19.19. Yeah, looks like somebody bought it too. So, or somebody, you know, they found a buyer and seller and they're posting it, and then the other guy just lifted him. But if I did this trade, let's actually see, buy this, sell this. It's 30 cents, right? I think I'll do that. So I'm gonna send an order for 30. So you see how I have all these orders out, but most likely I might not get filled. So if I get filled for a good price and I like it, right? So if I look at the stats, the 52-week high-low, you see how low it is? It's the same thing as ABX. So ABX was 0.2, but now I think it's like at the 10th percentile. Newmont, right, is not, and I think, was it like Newmont and ABX were going to merge? I don't know, but one of these two companies were going to merge with each other, and maybe the talks are off. But in the end, you know, usually people merge in the same industry to save costs, right? And that in return bumps up your margin. And if that was the case, and now that's not going to happen, maybe it's not that great for these stocks, right? So if I get this for 30 cents, the thing I like about this is you pay 30, but you're buying a $2 spread, so you have a chance of making like 600% on that, right? Close to 600. So I like that. I was trying to do ABX because they bought the June puts, right? And I talked about this before. These June 17 puts, you see how there's this open interest, but he was paying like 45 cents. I think the second batch he paid 74 cents. So let me actually go here. Yeah, so see how he paid 48 cents. Then he paid, those are calls. Yeah, 48 cents. And looks like this is actually like a, right. So there was some call buying there too. So that was the first time I saw it. So, you know, not all the orders are bearish on this one. So that's it. So I saw Newmont. It looks like put not too bad a return. So I put it on. So the CBS, I'm trying to put it on. So CBS is another one I saw where people are essentially buying a lot of puts, right? And they were buying calls. So, you know, when I looked at it, they were only buying calls. Let's actually see. Yeah, so it looks like the April 59, April 59 and a half, and then the May 60s. So on the May 60s, people buying these May 60 calls, right? So my thinking was that if I look at the stats tab, you see how the volatility is at 100%, right? So if I look at this chart, it's very expensive vol, right? So I was thinking that people, obviously, if they are bullish, are making a bullish bet. So when I was there, most of the bets were calls, but it looks like now the puts are coming in. This chart actually looks, I don't know, kind of bearish to me, but before it didn't. So this is how, like, maybe this is how fluid like your orders could go. But my thinking behind this trade right here, and I just got executed before I did it, was, and let me show it to you, is I was gonna buy the 59.5 60 call spread for 25 cents, right? And a chance of making 100% return on that. So like I bought this call spread. If it goes 60 or higher, basically I'll make 100% return. If not, if it stayed right at where it was, and I don't know what just happened. Right, so basically, I think when I was looking at it, it was like somewhere here. You see how it was trading like 60 bucks? So when I actually sent in this trade, it was like here, but something must have happened where the stock took a nosedive, and then I got filled. So originally when I put this on, if the stock stayed exactly the same or lost 25 cents, I would have made money. But now it looks like I'm actually, you know, it's actually not in the money. Both of them are out of money. So I'm going to have to see how that goes. So originally when I put on, but I wasn't paying any attention, so I got filled. So we'll see. But essentially I'm putting on a bet that I thought was better than 50-50, and my return was like 50-50, right? So 100% return. But we'll see. So I have HTZ, as you guys know. And the reason I'm pointing this out is because I did this call spread, but now I have this naked. So instead of, I'm trying to sell these for like 190, 195, and that will essentially have me buying the spread for even. So basically, I'll be risking by doing the original spread, and then if I can get this spread on, I have a chance of making $1, and the most I can lose is 0. So that's why I'm working it. Or maybe I can just sell it, right? The other one is this Splunk. I did this call spread, and now, you know, I have these calls naked, right? So I didn't close them out just because I only had a one lot. So I would normally close out maybe half and keep the other half, but now I'll just, you know, see how it goes. Now if I sell like the May 70s, let's say this went a little higher. If I sold the May 70s at 320, I'll be essentially putting on the 65-70 put call spread with no money down and max of making $5 because I sold that other calls that expired, and these are now worth more, right, than whatever that spread was worth. So that's what I'm thinking on that, and that's about it. You know, as time goes, it's gonna be little bit tough for me to actually cover everything. So I'll try to cover, like, I don't know, most of my stocks, but you see already 2, 4, 6, 8, 10, 12, 14, 16, 18, 20. I have 24 positions, and most likely, like, this could actually go up to like 100 positions by the end if my account could support it. But essentially, I'm gonna keep doing these trades. Hopefully, it'll work out for the good. My biggest risk right now is in Apple, and that's a residual position. So let me just, and this one I'm kind of, I don't say I'm married to the position, but I'm basically in it till after earnings, right? So tomorrow after the close, they're gonna announce earnings, and I have these full call spread. The most I can make is, you know, I don't know, I think it's like $3,600 or something total for my original investment, and the most I can lose is what is it, like 4,400 or something like that. So you know, I'll see how that goes, but that's my biggest position. Other than that, my account is pretty tame. For those stocks that I'm actually not talking about, some of these are the trade a minute guys trades. So yeah, it's not, you know, it's their gig. So you guys can go to tradeaminute.com and check them out. But as for me, I'm not gonna just show what they're doing because that's how they make their living, right? I do follow him just because I like him, the head trader, and I think he knows what he's talking about. And I need, you know, I'm always trying to learn more on the technical trading side. So other than that, that's it. I'll wrap it up. Hope your trading is going well. Just know that this is one of 2 videos today. I'm gonna do another video that basically talks about earnings, right? So this is one of 2. I'm gonna actually post this, and then it'll be at like the bottom part of the play cycle, and then we can actually do the next trade. So I'll be back in about 15 minutes. Hope you guys are doing well, and I'll talk to you guys tomorrow.